Stock of the day, we thought we'd take a look at Centuria Capital. The company acquired the Busselton Blvd Shopping Centre in WA for 16 million, which will form a wholesale property fund trust. The trust is forecast to start yield 7.5%, paid monthly, initial 5-year term. Will seek to raise about 11 million to launch the trust next month. All right, Philip, what do you reckon? Is it the time to be getting, it's only a small transaction, given that, but getting into retail property trusts at the moment, what do you think? I'm going to call this one a hold because they have the advantage that they can do these sorts of transactions and they're more diversified being a fund manager. But my issue with property trusts, generally speaking, is people like to compare the share price to net tangible assets or their current cap rate. Those cap rates are so out of date because they're based on transactions from 6 months ago. The volume in the sector, they're thin. So it's not a fair market value at the moment because people don't want to transact at what would be market prices. So in a lot of cases you've seen share prices fall well below NTAs and people saying it's cheap, it's cheap, it's cheap. My view is as a sector, those NTAs are coming down as just look at what's happened to interest rates, right? Those NTAs theoretically should be a lot lower than they're currently published, but because they're based on recent transactions, there haven't been many, they look like they're cheap. So for me, until the world wakes up to itself and realise that those NTAs aren't real or aren't effective because it's not a proper liquid market, they're probably not as cheap as that analysis suggests that they are. So not all of them, but some of them. So I'm going to call this sector a hold because this whole argument is it's at a material discount to NTA. The NTA is not always real. It's going to take some time for it to adjust. We're about to come into the June/August reporting season. We'll see some adjustments. You might get NTAs going up, which is silly given what's happened to interest rates. Very simply, interest rates up, NTAs must come down, but they won't. So for me, I would park this sector generally. Pick the good ones, but it's a hold. There's other areas to easily make money. Rudi, Dexus came up on the call last week. Yes, it's commercial, not retail, so we've got to make that differential. But the point that Philip was making was made back then that the valuations, because these sort of REITs don't want to revalue in a falling market. If you can delay, you look better. But Dexus had to sell a small commercial property for 17 million below its valuation, and one of the few ever to do the benchmark at the moment. So what Philip's saying is that all of these valuations are so old, they're not realistic at the moment.
That is true, but we have some unlisted assets, and there's the occasional one from Dexus, but we have a lot of unlisted assets that are actually changing hands. The revaluations are happening, but they are much lower, much smaller at this point in time than what the share market is pricing in. So if you look at stocks like Centuria, and there's a very simple way of doing this. You look at the forward-looking implied dividend yield. From memory, that's something like 7, more than 7, between 7 and 7.5. That's quite a lot. That's really a lot, right? That already gives an indication the market is already putting quite a big discount on the valuation. So when I see analyst reports coming through, and there have been some analysts that have been trying to put some valuations on the sector as a whole, the general conclusion seems to be that the valuations are already accounting for quite a lot of downside. It's just that the market doesn't know how much exactly where that's going to end up. But I think for the quality ones, and maybe for the larger ones.
Is this quality?
Yes, but this is one of the smaller ones. I'm still old enough to remember them, but this was one of the best performing REITs on the stock exchange. And that shows you the power of bond yields. Right? At one stage, this was flying. I remain a big fan of Goodman Group. They are comparable, except for the fact that Goodman Group is, I don't know how many times larger than Centuria is, like a lot.
And mainly in industrial.
And exactly, yes. So you do carry, but if you want to be really critical about it, they don't seem to be getting away from the $20 a share. Right? They go from 19, 21, 19, 21. And that is also the volatility in the bond market, which it upsets people. And but the good thing is we have a confession season going on, and Goodman Group has again reiterated they will meet their expectations. Yeah, that's why it's not lower. No? It doesn't fall. Yeah? Yeah. And I'm a big fan of Goodman Group. Having said so, what we have to take into consideration is the bond yields. The big question mark is, yes, inflation is coming down, but how quickly is that going to be? If you're very positive about it, then we should have lower bond yields. Yeah. Which means these undervalued trusts, bonds say they will have a jump. Right? But as long as that remains unanswered, you have discount, and we're obviously waiting on transactions to come through, so we get a clearer picture, hopefully in August. Yeah. Probably a little bit too early, but we will get some adjustments. I think given the tradition, the legacy that these guys have, and they are amongst the, let's say, the more entrepreneurial teams in the market, you can give them the benefit of the doubt, I think. Also because you're buying at a discount. Yeah. I mean, you're getting 7% plus in yields. I don't think I've seen anyone who covers this sector suggesting that they will have to cut their payout. And you just have to trust on the fact that, because the knife cuts both ways. These guys are constantly on the lookout to acquire assets, which they now probably can do at a discount, and sell them onwards and make a return out of that. That's basically the bread and butter what they do. Yeah. So you have to trust that these guys keep doing what they're doing, and given enough time, you'll end up on the positive as a shareholder.
So you're saying a buy?
Yes, but...
You are?
Yes, okay. But do take into account that you may have to be patient. There's dividends. Okay. And it is, at the end of the day, it is a relatively small cap player in that sector. So at times, don't throw whole your portfolio at it, because the volumes in trade can be quite low. Yeah. Right. I mean, so long-term buy. You definitely have to have a long-term view on also the fact that in 2-3 years' time,
would this be your best rate?
No, and if you go on a risk reward, I would probably prefer Charter Hall. Right. Probably also larger size. Yeah. And my ultimate one remains Goodman Group, right. And also because size and sector and legacy of management.
Sure. All right.